The next pattern is my favorite pattern. This pattern is called as a zigzag pattern. Why is it my favorite? Because this pattern is formed when there is confusion. The bears don't know whether they have to push the markets lower. The bulls don't know whether they want to push the market, take the markets higher. So there is confusion between both the camps. They don't know what is the direction, what is the next ongoing direction which is coming up for the particular instrument. In this case, since it's just Bank Nifty and Nifty that we are discussing, there is indecision. So where there is indecision, there could be an expected trend reversal or a small pullback which may be coming in that particular instrument. If it's a strong bearish trend and you see this pattern forming, we can expect a small pause out there and then a brief kind of a relief rally or a dead cat bounce in case of a bearish swing which is seen earlier. In case of a bullish trend earlier, if this pattern gets formed, then it tells you that yes, this bullish swing can pause here for some moment, go into a sideways consolidation before the resumption in the next leg, or continuation or a reversal in the other direction. So a small pullback is what we can expect when this particular pattern is formed. So a zigzag pattern tells us where there is a confusion, you will see a zigzag pattern forming. So when this pattern forms, if you are already into a bullish trend, you can wait, you can start trailing your stop loss closer to the bricks, and you can do some partial profit booking as well when this pattern forms. Similarly, if you are short and you are trading on the sell side, if this zigzag pattern forms at the end of the trend, we come to know that yes, if a zigzag pattern is forming, there is some kind of a pause to the current trend. There could be a small pullback, so it's prudent to take some profits home, to trail your stop losses aggressively and wait for the next trend to continue in the downward direction. Wait for your next pattern to form when the pullback finishes. Okay, so zigzag pattern. How does this zigzag pattern look like? Let's look at how the zigzag pattern looks. Let's talk about the bullish zigzag first. In a bullish zigzag pattern, we have this pattern is made up of 5 bricks. So there are just 5 bricks in it. The first brick will be a bearish brick, followed by a bullish brick, again a bearish brick. So as we said, there is confusion. Again a bearish brick. So bullish, a bearish brick followed by bullish brick, again a bearish brick and followed by bullish brick. So these are the first 4 bricks which are created, and you can see them forming one on top of each other like this in a zigzag manner, a kind of a Z getting formed. The next brick that forms decides the course of action and decides whether this is a strong support area and there could be some pause in the downtrend. So after the bearish, bullish brick, we have a continuation 5th brick which is a bullish brick. So here you can see in this example or this slide where I have pointed a bearish, bullish, and a continuation brick which is bullish out here. So it's a 5 brick pattern, very simple to understand and very crisp and clear. You can see this pattern, it is so evident in fact. Once this pattern is formed and you have enjoyed your leg of rally on the short side, when a bullish zigzag pattern is formed, it is prudent you start trailing your stop loss closer, book some shorts aggressively, and better to wait for the pullback for next leg on the downside. So this is an example of bullish zigzag pattern. This is a Bank Nifty 35 brick chart. So first bearish brick followed by a bullish brick, followed by a bearish brick, followed by a bullish brick. So confusion, there is no trend, up, down, up. So there is no trend. Wait for the next brick, which is the 5th brick which gets printed on the bullish side, which gives you a signal that yes, this is a support. You can take a long trade at this point in time. Your stop loss is 1 brick below the bearish brick. So the 2 bearish bricks which are formed at the same level, 1 brick below that is your stop loss. Your entry is 1 brick after the 5th brick is formed. That's your signal brick that yes, there is a zigzag pattern, 5 brick pattern. The 6th brick which forms is your entry. So we know now the entry and we know the stop loss. The targets, we have the formula already which we have discussed in the earlier setups, can be used to find the targets on the bullish or the bearish side. Now zigzag pattern, this is one example which you can see on screen for Nifty Bank, wherein a 35 brick chart is used, and this chart is forming at every 35 points. There is a bearish brick, bullish brick, bearish brick, bullish brick, and then the continuation brick forms, confirming your pattern. Let's look at another example of Nifty. This is a 20 brick size Nifty chart. A bearish brick, a bullish brick, bearish brick, bullish brick. Confusion among both the camps. The 5th brick solves the confusion, wherein a bullish brick gets formed and the pattern gets confirmed that this is a support pattern. You can use this level to take your entry with a small brick stop loss, and then continuation of the trend in the bullish side, or a pullback at least should happen from this particular support level. We can also use just the way we have indicators in candlesticks, we have indicators in point and figure, we have indicators in all the charting tools. We can use indicators for Renko charts also. On your screen we can see there's a double moving average which I have used. So a double moving average, it's a 20 brick double moving average and a 40 brick moving average. So we have two moving averages, 20 brick and a 40 brick moving average. Now the peculiarity of this particular moving average would be a 20 brick moving average is an average of past 20 bricks and not 20 time periods, because these charts are time independent. We do not have time factor in these particular charts. So at past 20 bricks average is what you will see in a 20 brick moving average, and past 40 bricks moving average is where you can see the price pattern of the past 40 bricks and the average is calculated. Now we know what the 40 brick and the 20 brick moving average is all about. A 20 brick average above the 40 brick average means a bullish trend. The shorter term average is above the longer term average. So longer term, a bigger brick size is what we are talking about here, not in terms of time. So when a 20 brick average is above 40 brick average and you are getting any of the bullish patterns, it could be a zigzag pattern, it could be a 1 brick pattern. On your screen you can see that I have used a DMA, that is double moving average 2040, and a zigzag pattern example to be exhibited on the screen, wherein if you have a bullish zigzag pattern forming above the double moving average, it gives you a confirmation that this is a support area. We can participate in the next leg on the upside for the breakout, or at the breakout when the 5th brick is formed, we get a confirmation from this particular setup and we can look at a bullish trade setup in this particular example. This is an example of Nifty. It's a 10 brick chart that you see of Nifty, and 10 brick chart with a zigzag pattern above the moving average is what you can see on your screen. A bullish pattern above a bullish moving average gives you an edge to participate in the direction of the trend again. So moving average work beautifully on the Renko charts also. When there is a crossover of 20 above the 40 indicating a bullish trend, try to look for all the bullish patterns, maybe in the form of 1 brick, maybe in the form of 2 brick bullish, and participate in the trend. Similarly, zigzag pattern. So bullish pattern zigzag is what you can look for and understand that this is a strong support and participate in the ongoing trend. Let's talk about bearish zigzag now. Just the way we have bullish zigzag, bearish zigzag is exactly opposite of a bullish zigzag pattern. So we have a bullish brick first, followed by a bearish brick, again a bullish brick, again a bearish brick. So complete confusion is there among the two camps. The 5th brick which forms gives us a confirmation of the downward trend which is going to resume after this particular pattern is formed. Usually you will see bearish zigzag pattern forming after a bullish trend. So a strong bullish trend usually may culminate forming a bearish zigzag pattern, That's a prominent area rather where you should look for this kind of a pattern, wherein there is confusion, bullish brick, bearish brick, bullish brick, bearish brick, and the fifth brick which forms. So again, this is also a 5 pattern, a bullish brick, bearish brick, bullish brick, bearish brick. But the bullish bricks are formed at the same level, and the fifth brick which forms confirms that this is a bearish zigzag pattern. At the sixth brick, you can take your entry and look for a pullback or a reversal in this particular trade setup. Now let's look at a few examples for the zigzag pattern. First example is of Nifty, wherein I have used a 10 brick chart. You can see that a zigzag pattern getting formed, a bullish brick followed by a bearish brick, again a bullish brick, again a bearish brick. The fifth brick confirms that this is a strong resistance. We can look for some reversal or some kind of a pullback in this particular setup. The swing high becomes one brick above the swing high. Those bullish bricks becomes your stop loss, and entry is at the sixth brick, which confirms the pattern that there is a bearish zigzag pattern which is getting formed. The example is of Nifty 10 brick, wherein we see this pattern getting formed. Entry is at the sixth brick, stop loss is one brick above the bullish brick, and continuation of the a reversal of the trend and pullback is what we are expecting in this particular case. Next example is of Bank Nifty. This is a Bank Nifty 35 brick chart. So every 35 points a brick is printed. The first bullish brick followed by a bearish brick, again a bullish brick, bearish brick. Confusion, indecision is what we see out here. The fifth brick confirms the bearish pattern, and continuation of the trend in the downward direction is what we can see in this particular setup. Now if we club this up with moving average, why not? Moving average could be used even in this particular setup as well. As the way we talked about a 20 brick moving average and a 40 brick moving average to be bullish, 20 brick is above the 40 brick. In case of a bearish trend, we are looking for a 40 brick above the 20 brick. So 20 brick is below the 40 brick average, indicating that the trend is bearish. If we get a bearish zigzag pattern in this particular trend, we come to know that there is a strong resistance which is there in this particular setup, and we can look for a short entry with one brick above the bullish swing as your stop loss and continue in the direction of the bearish side.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.